So I'm using the QuickBooks test drive account, and I'll click on reports on the left sidebar to view all reports. We'll start with the profit and loss. After opening the report, make sure the date range is correct. Also keep in mind if transactions aren't categorized yet, they might not show up properly here, so make sure your books are updated through whatever date you're reviewing. I'll go ahead and select last month, assuming that these books have been reconciled. Then I'll select cash basis, since that's a pretty common choice for small business owners. And once these are set, we'll go ahead and look at the report. So first, we'll look at the income. Does it look about right? If you gave a refund to a customer, that will show as negative, which is fine. But if income itself is negative or an amount looks unexpectedly high or low, you can click on it to see the breakdown and make sure everything is categorized correctly. We'll do the same for cost of goods sold and expenses. If anything doesn't look right or we see a negative amount, you want to go ahead and click into it and review what's included. And finally, we'll take a look at the overall profit and loss. Does it generally match what you'd expect? Did you feel like you spent more last month than you brought in? And if not, you can click into the individual numbers to see what is making up those numbers and try to figure out why the numbers don't match what you expect. A few common red flags to look out for would be negative numbers that don't make sense. So almost any negative number except for the discounts given to customers or income where you might have given a customer a credit memo or something. And then on expenses, there wouldn't be very many negative expenses ordinarily. If anything looks wrong though, again, click the number and see what transactions are making up that total amount on that report. Another good thing is to take a look at your categories. Do they make sense? Are there sub-accounts you don't need, or are there things that you would like to see on the report that are not there? So sometimes business owners would like to see a certain breakdown of their expenses to help them make better decisions. And that's something you would want to look for on your profit and loss. If you're not seeing all the breakdowns that would be helpful for you, you might want to add sub-accounts or let your bookkeeper know that these would be helpful. You know, I'd like to see more sub-accounts under what type of income you have, or just whatever it is you want to see broken out that would be helpful for you. So look for that as well. And then again, be aware that the date period of the profit and loss could affect the numbers a little bit. So if they seem off, it could be because something didn't clear the bank until the next month or something like that. So those are things to just kind of be aware of. All right, so now let's go ahead and go pull up the balance sheet. This report shows what you have and what you owe as of a specific date. Before reviewing it, make sure transactions are categorized and ideally that your accounts are reconciled through the date of the report at least. Otherwise, the report will be misleading or could be misleading. Then just do a quick check. Do your bank balances match what you expect? Do credit cards or loans look right? Is anything surprisingly high or low? And again, if something looks off, just click into it to view what's behind that number. A couple of specific things that we'll watch for in this report. If you don't track inventory, you definitely don't want to see inventory, especially not a negative inventory on your balance sheet. If you are tracking it, then just make sure that the number looks about right for you. Also, watch out for a high undeposited funds balance. This represents customer payments that have been recorded but haven't necessarily been deposited yet. If it's higher than you expect, the deposits might not be recorded properly and you might have duplicate income. So especially if it's like much higher than you expect. I mean, occasionally the payment is recorded at the end of the month and the deposit is made the next month. If it's something like that, then there's nothing to worry about. But if the number just looks outrageous to you, you definitely would want to look into what's going on with your undeposited funds and whether all of the payments being recorded are actually being matched appropriately or recorded appropriately on the bank deposits when they're deposited. So that's something to look for on this report. And the same as with the profit and loss, look for negative numbers that don't make sense. Like you typically wouldn't have a vehicle asset that is negative. You know, you don't own negative trucks, you know. So that could be an error on the bookkeeping side that you'll want to be aware of and get it adjusted and make sure that whatever got recorded to that asset gets recorded now to the correct account. Another thing is if there's a negative amount like on an asset or something, it might just mean that like somebody created an account that they're using to track expenses and just set the type as an asset type. So it might just be a matter of changing that account type to an expense type and getting that cleaned up. But that is, like I said, just watch for any negative numbers and things that don't make any sense to be negative. And I would click on and check into those as well. And also, finally, of course, make sure all your business bank accounts, credit cards, loans, and assets are actually listed on the report. I've inherited clients before that everybody thought everything was great. The bookkeeping was all reconciled and everything looked good inside their books, but the bookkeeper was not aware of some accounts that were missing that would have changed the way the reports appeared, basically. So make sure that all your assets and all your liabilities are listed on the balance sheet. And if something's been sold, either if you're doing your own bookkeeping, that will need to be resolved and taken off of your balance sheet. Or if you have a bookkeeper, let them know, I sold this truck, I don't have this asset anymore, and let them know what's missing. They will greatly appreciate you doing that, because bookkeepers can't know what you don't tell them. So they definitely be happy that you let them know. So if you do see anything missing, let your bookkeeper know, or go in and add what's missing to your balance sheet and get that recorded so it shows up, or add it to your chart of accounts so that it'll show up on your balance sheet. As a bookkeeper, there's one more report I really like to review every month, and it's the transaction list by vendor. This is helpful to see where your money was spent and how these transactions are categorized to each vendor. That can help to catch inconsistencies that you might not see on the main report. So that's kind of useful for just to review how your bookkeeping is going and whether there might be any rules that are not categorizing properly or anything like that. One final note, you can review your reports without logging into QuickBooks, of course. Most bookkeepers send out monthly reports, and you can also set up your reports to be emailed from QuickBooks automatically to yourself. But when you open reports inside QuickBooks, you can click on the numbers and actually see the details on the report. And that way, if something doesn't look right or you have questions, it can be worth logging in so that you can drill down and look into what's going on. So anyway, that's a basic overview that could help catch quite a few red flags that might be there and help you be aware of what's going on.